It's Scott with Scott Talks Investing. In today's video, I want to walk you through what's called an asset performance test, which is a test that we help conduct on client property portfolios or rental properties to identify just how well their current net equity is working for them in their property. So, one thing that we commonly come across is people have a tendency to run their cash on cash return scenarios off of the purchase price of the property when they initially purchased it. So let's say someone bought a property for $300,000, at this point in 2025, some years ago, and they're receiving, a net income each year of 30K. Well, they're going to say my cash on cash return is 10%. Yes and no. One thing that's not being factored in frequently is net equity. So, how much net equity do you have in that property, and how well is that equity working for you? So, that's the purpose of the asset performance test. I'm going to run you through a quick scenario and hopefully provide you with the resources you need to evaluate property on your end to see if there's opportunity to either reinvest or simply better your position as it comes to rental property ownership based on your needs, of course. So we've got an address, 123 Main Street. Say the fair market value is $800,000. We're going to go ahead and say that the property is currently bringing in $3,500 a month. Let's go ahead and assume that the principal and interest on that mortgage payment is $1,250. We'll go with $500 in property taxes. This is on a monthly basis. For insurance, we're going to go with, call it $250. Management fee, a 10% management fee, which is on the higher end, would be $350 a month. Let's go ahead and drop it down. Let's say it's going to be $300 a month management fee, and we're setting aside $150 a month for any repairs or maintenance. Property's in decent shape, but still always a good idea to set money aside for any capital expenditures that come about. And then from an HOA or other perspective, let's assume we've got $100 in expenses for landscaping or something of that sort. So we're going to go ahead and total these up. We've got 2,025.50. So we've got 3,525.50 for our total expenses. So we're going to have a net operating income on a monthly level of $950 a month. So what does this mean? On an annual basis, we've got a net operating income of 950, multiply that by 12. So we got 950 times 12 is going to bring us to, let's see here, $11,400 on an annual basis of net operating income, or NOI. So in order to figure out what our cash on cash return is on the equity in which we have the property, we also need to understand what the mortgage balance is on the property and also account for any closing costs when you do elect to sell that property. So let's go ahead and take 800,000 as the fair market value, and we're going to multiply that by 0.94. 0.94 would accommodate for 6% in closing costs. It's a good number to go off of. There's obviously going to be some variance within that, but a safe number to run calculations on. So that's going to leave us with a $752,000 of anything of net proceeds from the sale of the property. Now let's go ahead and assume that we have $200,000 in mortgage, or that we still have an outstanding balance of $200,000 on the mortgage. So we're going to take 752 and subtract $200,000 from that, which is going to bring us to 552. So 552 is our net equity in the property. We're going to take the $11,400, and then we're going to divide that by the 552 here. And so that number of 11,400 divided by 552, again, our net equity in the property, that's going to warrant us a decimal point, and that decimal point is 0.0207. So move the decimal point over a couple spaces, and it's going to give us a 2.07% return, cash on cash return on our net equity in the property. So that gives you clarity into how well your equity is working for you. You might be scratching your head and saying, well, this property doesn't seem to be working very well. And the answer to that is it depends, right? This isn't taking into account any of the tax benefits, depreciation, things of that sort. So this is purely just a metric or a number to provide clarity into how well your equity is working for you. I hope this video is helpful. If you have any questions or if I can be a resource, please leave a comment below. I'm happy to be a resource on your end to answer any questions. I hope you can take this information and apply it to your rental property ownership and evaluate your rental properties from slightly a different view or lens. And again, thanks for stopping by.